the world is looking at this new incoming Modi-led government, the challenges it faces, and the road ahead for India's economy and capital markets. Today, in this series of discussions, I'm joined by Arnab Das of Das Capital. Arnab, good afternoon to you. It's late in the night here in India. Give me a quick assessment of what your instinctive reaction was for India's equity markets and its economy when you heard of the unprecedented majority that Narendra Modi and his party won this elections with.
Well, I think it is good news because, of course, it's the first absolute majority in many decades, and it's clearly as you've said, a very strong mandate, and a mandate in particular for quite a lot of change. Now I think the world will look to see how Narendra Modi signals that he's going to make these changes, how he's going to work with all of Indian society. Of course, India is a much more complicated country than one state. And it's really many nations, right? So people will be looking to see how inclusive he is, I think, at one level, and also how decisive he is at another level in making change.
Arnab, what is it that the world will want to see a Modi-led government do here in India? Here in the domestic media, we tend to get caught up sometimes with narrow issues of specific FDI policy. Are we opening the doors to FDI and multi-brand retail or not? Things like that, insurance, pension. Are these the things that the world will be measuring, at least in the near term, Mr. Modi's government and its commitment to reform? Or are there more macro issues, for instance, stability for the fisc, maintaining the stability that we've seen in the current account deficit, that you will be looking out for?
Well, I think all of these things will matter quite a lot. There are a lot of people looking at India much more closely now that there's been this mandate for change, and indeed in the run-up to it, than perhaps is normally the case. And so I think there's going to be a lot of obviously, as you say, domestic interest in very specific issues, and there's going to be a range of foreign interest as well. I think the international marketplace, whether it's corporate investors or portfolio equity investors or bond and currency investors, will be focusing on all of these issues. On the macro, I think the current account adjustment and the work that Raghuram Rajan has done at the RBI, that has been a very salutary signal. So one important macro signal will be, as you say, the fiscus. Another will be how is the interplay between the politics and the fiscal on the one side with the monetary. We need to see positive signals on that front, right? There have been some interesting signals from Rajan himself on that front. And I think those blocked projects, whether it's FDI or infrastructure, whether it's rules, whether it's the GST, whether it's domestic issues like the identity card, all of these things will be in the mix, and different facets of the international system will be considering all of them.
You've been watching the Indian equity markets. We've had quite a run through the course of this year. Things have calmed down in the last couple of days. Where do you think we're headed in terms of, do you think we could achieve newer highs in the Indian equity markets, or do you think most of the good news is now priced in?
Well, I think the short-term good news of the election itself and the strength of the mandate is priced in. Of course, as you've sort of suggested, in the last day or so, the Indian equity market and the currency have underperformed some other countries in emerging markets and around the world, developed world as well, where there are other things going on that are driving those markets. I think it's only natural that there be a bit of consolidation and some money and profits being taken off the table. Once the signals of change and the cabinet start to come through, things like this, there is the prospect of more upside. I would say, however, that India has outperformed quite a lot, and there will need to be delivery not just on the reforms but also on the performance front, and that may be somewhat more complicated, right? My friends at Trusted Sources, which is an emerging markets research shop, have focused quite a lot on the kind of the hope rallies in election countries throughout emerging markets. As you may know, there's a kind of a panoply of emerging market countries around the world that have had major elections, some of which are still going on or lie ahead. And all of those countries have been outperforming quite strongly. I think as those elections roll off, including in the case of India, the delivery on the promise in the political promise in those elections and the economic results will come under more and more scrutiny, particularly as the international environment and the developed world environment starts to change.
Arnab, if we had spoken the same time last year, India was down in the dumps, right? That was just before we saw the Fed and Mr. Bernanke do what he did with regards to the taper. We saw a big run on the rupee through the course of, last year, the autumn of last year. Things have improved substantially for a variety of reasons. The outgoing finance minister did some hard work along with the RBI governor on the external front. And then we've had this hope rally take place in the equity markets and all the FII inflows, of course, helping matters as well. Where does India stand today in the emerging market basket? Do you think that it is the preferred destination? And I ask you this because there is already speculation of when interest rates might start going up in the US and what that will mean for fund flows to emerging markets across the world. Do you think we stand a damn good chance of getting a bunch of that fund flow here to India?
Well, I think if the path of interest rates in the U.S. changes significantly, right, so that in the sense that the timing of the rate hikes comes forward, the expected timing comes forward, and the trajectory of rate hikes becomes more aggressive in terms of tightening, I think that'll be a very tough environment for many emerging markets, including India. Mm-hmm. I would not expect that, however. I think it seems to me that although there are good signs in the case of the United States and the UK as well, where I live, as you mentioned, right, there's a bit of a shift in the verbiage from the Bank of England. The general story is that the recovery is quite anemic throughout the developed world. And indeed, in the Eurozone, if anything, the recovery has taken a turn southwards. Right? So I think we have, let's say, a relatively cushy prospect for how rates will change in the developed world. Right? The Fed has been, although it put the taper on the table last year, sparking the taper tantrum, and that made India a place that could, at least for a while, could almost do nothing right. What then happened, as you say, is that policymakers and politicians in India responded, and in addition, the Federal Reserve calmed the market by effectively putting forward guidance in place of QE because the tapering was coming down the pipeline. And that so far has worked. If that unravels, the politicians in India and elsewhere are going to need to do a lot more hard work once again. But as I say, I don't think that's actually the central scenario. It seems to me the central scenario is that many countries, including India, have made a substantial adjustment. So far, so good. Many countries in the developed world are having a weaker recovery than most people would like to see. So therefore, although there may be tapering in the U.S., the glide path of rates is going to be fairly slow and fairly backloaded, if anything, rather than front-loaded. And that should give space to emerging markets, including India, to get their act together. I think the big danger is that in that scenario, people become complacent again, including in India, and think they have more time and more room to let things take their own course, more room to negotiate perhaps the federal level with the state government, with the upper house, with various kinds of things that might be required. Now, of course, the political process has to take its own course, but it's precisely when that course is taking place and comes into collision with pressures in the international markets that you get these big dislocations, and you need to move much more quickly. Like I say, I don't think that's going to happen, but that is a risk for later on in this story.
All right, so a quick answer to when you expect rates in the U.S. to start moving up, given the context that you just had, the second half of 2015?
I would say we're looking probably at mid-2015. So 2014, we're talking about tapering, right, and the completion of tapering.
Yeah.
And then we're probably looking at something, in the 3 to 9 month time frame. Now, that's, of course, pretty wide before the first rate hike. But I give that wide window because I think the path of the U.S. economy, although good, is not very strong. And I think, not only that, but like I said, the glide path is going to be slow, and, rates are not going to reach the stratospheric highs of the past, right? They're going to stay fairly low. So that's not going to be that bad an outcome.
All right, so that means that, Mr. Modi's government will have, let's say, at least a year to indicate or at least send out the message to the world that they mean business and that they're committed to reform and liberalization and cleaning up governance and all of that. Last year, at the same time, we were talking about the rupee and asking people for levels on how low it could go, and we had all these numbers of 70 and 68 and 69 doing the rounds. And now we're asking people, look, how high do you think the rupee can go? And really, what does that mean for the economy and for the equity market? So what number are you working with on the rupee? Where is your comfort zone or the comfort zone of your clients that you consult with? Where do you expect the rupee to go?
I don't think we're going to see very big gains in the rupee from here. I think what has happened is that the rupee has recovered partly because monetary policy has been tightened, gold imports have been squeezed, and also because capital has flooded back into the country to some degree. Now, I think what's interesting is that the equity market has far outperformed the currency in many respects, right? So I suspect that many equity investors have taken a bet on the stock market and not really on the currency. And I think that's because they're concerned still about the monetary policy risks in the equity space, the global monetary policy risk. I wouldn't leap to the conclusion that Narendra Modi has a whole year to deliver. Right? Okay. The path of the Fed is not the only thing that's going on in the world. Of course, I would tend to agree that it's the most important, but I think people will be looking for signals of progress in the first 100 days to benchmark India against other emerging market countries. As I was saying before, there are a number of other countries that are having their own political processes. If it looks like Modi is delivering, then there's probably still some room for outperformance. If, however, he's not delivering, there's correspondingly room for India to underperform other countries where the hope still lies ahead of more action and more change.
All right. Arnab, the first milestone will be the budget presented by this new government. We'll come back and talk to you about what you make of it when that does happen in the next, month and a half from here onwards. Thank you so much for your time. Arnab Das there taking you through what he thinks India's new government needs to get down to doing.